Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the Australian dollar took further casualties on Tuesday and now presents itself to a potential challenge to 72.95 and with a base seen underneath at 72.60 to 72.10. Now the reason behind that is that the recent bullish divergence has been negated. The ADX's trend has potentially strengthened to the bearish case, with the MACD also supporting the downward potential to those targets. Any upside attempts should find a cap around 73, 70, 80. With the dollar index, which measures the greenback strength against a basket of 6 major currencies, reclaiming the 93 handle and still very much got the 93, 20, 60 objective, along with that posting a 16-week high, now sees the euro possibly challenging the level of 117.50. I am still a little bit on my guard due to the fact is that this pattern does represent somewhat to a potential rebound, and therefore if trading from the short side, I would continue to lower your stop losses according to your risk management in the unlikely event of a rebound. But as I mentioned, the dollar is still strong, and due to the recent COVID Delta variant cases increasing, the market seems to have turned to safe haven US dollar, and also with that has put a potential pressure to that support at 117.50. Reassess from there, because if this level does actually break lower, then the next target is seen at 116.80. Quite a whippy price action for dollar yen on Tuesday. After Monday's downward decline, reached close to its objective, which was just around 108.45 to 55, where the market did stab this level here and showing a slight rebound. But just be aware that there could be a bull trap lurking just towards that 110 handle or around 110.25, and therefore could see a rejection. Technically, we're not actually supporting this actual rise, and also from this candle, this is like an inside range day, and therefore is pretty much neutral in terms of how to represent this pattern. Overall, as I mentioned, above 110 should fail and eventually see a downturn to 109.55. Sterling reaches its objective of 135.60. That was pretty much the last of the views I had on this downside, due to the fact that we are oversold, although the trend is still somewhat bearish, but the downside target may be respected at 135.60. Nevertheless, only a close under there would expose a region of 134.70-75 on a New York basis. But still, as I mentioned, we are oversold. So do expect to see some profit taking, because the market has plummeted from 139 down to 135.60. So you can see why I feel the market may take a little bit of profit in terms of where the situation of the levels are at the moment. This in turn sees sterling yen also posting a dragonfly doji and also rejecting of the level which was called yesterday at 148.70-75 after posting low of 148.44. Now with sterling reaching its downside targets left me neutral, and also so has sterling yen left me neutral in the short term due to this candle and reaching its objective, because we are extremely oversold. So for the moment, I feel the market needs to be re-evaluated and then assess from there. Pretty much for gold, that is pretty much a listless price action. Now with this dragonfly doji, we saw hardly any rebound to that upside, and more to the fact we saw a rejection, and therefore with the RSI plummeting back through that midway point, does put potentially a bearish case back in play. But MACD is still holding to a positive signal, but look at the MAC and the signal line. It's still remaining underneath the zero, and therefore does give me some concerns, but we could be looking back towards 1,798 or to the bearish trigger level of 1,786. Only beneath there will pull the trigger towards a target of 1,760. Any upside attempts still views that resistant level capped around 1,833 to 35. Finishing up with oil, the market still remains somewhat negative after losing 8% the previous day. Now, from what I view is that the market can still drop further to the downside and look towards the region of 62 figure to around 62.45 as an objective, with the immediate target seen around 65.80 to 64.20. We are oversold though, but nevertheless the market can still play a little bit of a whipsaw range with a cap around 67.5 to about 68.5, but overall from the key reversal and then the bearish candles that came through does look towards this downside target. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday poll. I hope you enjoy the rest of the day.